Welcome everybody to the next episode of the Cannabis Review. We're going to be talking all things investing, both US, Canadian and European on this episode. And I'm delighted to be joined on this episode by one of the top influencers on social media and Twitter and retail investing at the moment, Roger, a.k.a. Puff Daddy. How are you keeping, Roger? You well?
Oh, I'm well. I'm doing well here in Canada, enjoying the weather. Finally, we're out of the snow. So yes, things are looking up in Canada here. So happy to join you.
Great to have you on the show. So I've been following you on Twitter and going through some of the Reddit guys, and you guys seem to be one of the top sources of information when it comes to the industry outside of the media organization. So I thought, what better than to get you on and kind of help educate everybody while we can. So I'm going to maybe jump straight into the first topic. And if you could give everybody a little overview of what's an American MSO versus Canadian MSO, and why would you take a position on one or the other?
Yeah, so we'll start with Canada. That's basically where I started my investing in the cannabis space back in 2015. In Canada, we announced in 2017 that cannabis was going to be legal in Canada, and huge opportunity for investing. We had companies such as Canopy Growth, Aurora Cannabis, Hexo, T-God, Afria, Tilray, all large Canadian names, and there was quite a bit of excitement going into legalization. Back then, the big thing that was driving stock prices, especially in the Canadian space, was licensing and build-outs. So it seemed like every time that Canopy or Aurora or Tilray announced an acquisition or expansion of their cultivation or a new 1 million square foot cultivation center, the stock prices seemed to really take notice and jump up in price. Unfortunately, what happened when the day actually of recreation happened, there weren't enough retailers out in the space to actually sell the product. So we had an abundance of plant and flower to sell, but the market, because we had not enough retail, especially in our larger provinces such as Quebec and Ontario, made things really tough initially on the large Canadian LPs. And ever since then, they've been struggling to get that supply-demand equilibrium at a right point. And we've seen a lot of closures now with Canadian LPs with the amount of cultivation that we had, just too much supply. The demand is there, but the amount of supply that we had in Canada. So back in 2018, the US names started popping up on stock exchanges like the CSE and the OTC. Now, obviously, it was the beginning stages. There were some states that were recreational, such as California, Colorado, that had huge markets, but there's lots of opportunities in the medical space. Certain states had medical programs, some states had medical and recreation programs, and that's where I thought it was a good time to transition from the Canadian names to the US names. So that's when I really started to change my focus to US MSOs.
Yeah, it seems interesting from the outside. It seems with Canada that the way to move your stock price is basically growth. That if there's no consumers to buy your product, then it's acquisitions of facilities or growth of facilities, where I think America seems to be the complete opposite, where there's a huge consumer base ready there. And I think it's about getting the product to those consumers as opposed to the flip side with Canada.
Yeah, and like Canada was a different bird in the fact that basically you had all these licenses and cultivation licenses awarded before the program started. And so you had this massive buildup of like I say, cultivation, but you didn't even really know what your market was going to be in Canada. And at that time, the Canadian LPs were being handsomely rewarded with, straight up arrow stock price moves of like 20-30% a day. I mean, that was the golden age of cannabis, where, an announcement of an M&A deal between two companies for $3 billion, companies like Canopy would go up like 30%, 40% in a day. And that seemed to really, really be the talk of the town back in 2017, 2018. Excuse me. So in the US, it's a lot different because it's a lot more restrictive, especially when it comes to medical licensing. There's typically limited amount of retail licenses awarded, typically limited amount of cultivation licenses awarded. So it kind of keeps in check the amount of retail and the amount of cultivation available. So typically that helps keeping pricing a bit stronger longer term. Now, eventually supply will catch up to that demand, and you will see a little bit compression on pricing. But then there's the opportunity for some of these medical markets to turn recreational, and then you're opening it up to a whole new consumer base. So it's very interesting. It's very complex though in the States. And obviously we've seen the last 14, 15 months, some price compression in the US. And I think that's mainly due, or a lot of us feel that a lot of that's coming from the lack of federal legislation or help by the federal government, especially the Democrats, to get anything done to move the industry along. So.
Yeah. Do you tell me, is the big thing between them the access to capital, do you think? Is that the Safe Banking Act is the hindrance? Because one of the next topics I want to talk about was the M&A activity. And I've been kind of wondering, is the access to capital in Canada going to allow for those companies to do mergers and acquisitions in the US space and take their footprint via that model? Or do you think the likes of New York legalizing now with everything on sale from September, the capital markets are generally in New York and you'll get access to capital if you're a company based on that territory?
Yeah. So like when it comes to safe banking and access to capital, I think, you've got almost two different things going on in the US. You have your top MSOs, we call them tier ones, your top, say, 5 MSOs from Cureleaf, Green Thumb, Trulieve, Cresco Labs, Verano. You can even add another company or two in the mix, but typically those companies, their access to capital, they seem to be, able to raise money through debt, or if they wanted to do shares. But at this point, because the share prices have been compressed, a lot of them have issued debt, and they're getting rates around 8%. If safe banking was available, chances are the rates would have been a little bit lower than that. Could have been 4 or 5% at the time. But those companies aren't struggling for capital. I think where you're seeing the big issue is when you start talking about social equity, licensing, and smaller business, when they don't have access to loans from banks to start a dispensary or open up a store, it makes things really tough. And even if they do have access, the rates that they're paying are a lot more than the top tier US MSOs at 8%. I've seen companies that have been getting like 25%, 30%, which is almost loan shark pricing. So, and that's if you can even access that type of capital. So, there is a bit of a divergence, but I mean, still being listed on the OTC and CSE has given the publicly traded MSOs access to capital that's allowed them to expand quite a bit over the last 2-3 years.
Very interesting. Next topic I wanted to talk to you about is your market position. Have you looked at all in terms of the European sector? Obviously, you probably know about Germany legalizing over here, or is it still a couple of years away for retail investors like yourself to be taking positions in European companies?
Yeah, obviously, with the announcement in Germany, that opened a lot of eyes. I have looked into the European market. I think it's still a little bit early. Not saying that getting in a position now, depending on your timeline, right? Like if you're looking 2 to 5 years down the line, starting a position now certainly might be prudent, considering, like you say, the Germany situation. Because I think as Germany goes, you'll see other, just like in the US, you'll see, gradually you'll see different states, and in Europe, you're going to see different countries follow, probably Germany, Israel, going forward, expanding those markets, and it's a huge opportunity.
Yeah, no, I agree. Do you think that some of these American MSOs are going to have their way? Would you guys forecast with growth in Europe into your investment, or are you guys strategically focusing on, look, if we make X return across full legalization, federalization in America, that's enough for our position to make sense. Anything after that is going to be a bonus.
Yeah, I mean, right now, I think that for me anyways, or my investment thesis is that the US market is still, in its infancy and has a long ways to go to maturity. And I think, we're talking like Rhode Island just announced they're the 19th state to go recreational in the US. I think there's going to be large opportunities in places like Florida to go recreational. 2-3 years down the line. Pennsylvania could be fairly close in the next year or two. So for me right now, my focus is still on the US. There are some Canadian LPs and also companies like Cureleaf that have some European assets and are starting to expand or focus a little bit more on Europe. But I think right now, because the market's still, the announcement with Germany, I'm not exactly sure 100% how quickly that's going to take place, and then what kind of rules and regulations they're going to have.
So they came back the other day saying that the new Minister for Health is going to rush it through this year. He came back last week saying that he's going to try and push this through and have something ready for the start of 2023.
And that would be, and that's great. But too, when it comes to something like that, the amount of time it takes to build a cultivation facility, and then on top of that, like, you have to get all your ducks in a row when it comes to environmental reviews and permitting and stuff like that. And then on top of that, once you finally get your facility built, it could take 3 to 6 months before you'll have a product that you can sell to the consumers. So it's great. And I know there's existing facilities already, but if it happens like that, eventually the businesses will catch up, but it'll take some time, right? That's a lot of capital that's going to be required to build those facilities. And I'm sure there's lots of money available, whether it's private companies, to take the opportunity forward. But yeah, that's great. Like you say, the quicker, the better. And that's some of the problem we see with the US market, is that politicians don't do what's best for the constituents that they're leaders for, and sometimes delay things, and it ends up just making it very cumbersome. Like New Jersey had probably a 4 to 5 month delay when they were supposed to start rec, and that had an impact on a lot of companies that had ramped up production with the expectation of sales probably, January, February 2022, and it ended up being, May before they got to open some stores. So, but yeah, it's an exciting time for sure. And I think there's a long way to go, especially like you say, Europe's probably, the dominoes will fall, just like in the US when it comes to individual states. So.
Yeah, well, I think you and I both might see the same. There's going to be a couple of dominant brands in about 10 years' time that'll have merged and acquired pretty much everything out there. And it's whether you've got your dollars behind the Coca-Cola of this industry or the McDonald's or whatever the large scale operators may be, it's going to be an interesting ride to see who that ends up being.
Yeah, for sure. And like you say, the brands and companies, like I think the news in Germany definitely opened some eyes. And I wouldn't be surprised if you do see maybe a few American companies start to focus a little bit more what's going on Europe. There is an abundance of opportunity still in the U.S. It's early stages, but yeah, Europe could be a huge opportunity, and obviously a country the size of Germany going recreational will probably really start kickstarting the cannabis craze in Europe. So.
Yeah, I look forward to it very much. We've just come up to our time there. I want to thank you very much for joining us. Anybody who isn't following Puff Daddy Jr. on Twitter, I highly recommend it. There's also a great large Reddit group that talk about US MSOs and Canadian MSOs, and again, another great source of information. Thank you very much for your time today, mate.
Yeah, no problem. Thanks for having me.
Thanks, everybody. Chat to you next episode.